hello everyone. It's the People Not Titles podcast again. I'm Steve Kemp, your host, and I'm here with Brad Hettich from Commercial Lending X, and he is the president, CEO, and the chief man in charge.
Yeah, pretty much. Yeah.
Okay, great. And so today we're going to learn a little bit about just what's happening in the commercial world, and so we're excited to have Brad. I consider him one of the leading experts here in Chicagoland and the nation in what's been happening in the commercial markets. But before we get to that, Brad, part of what we do here is just talk about a career journey, particularly in sales and sales leadership and just in business leadership. And so why don't we maybe start with, how did you get into commercial lending? Like, what was your first real job? And then what was the, besides Burger King or McDonald's or whatever that was,
All my lifeguarding days.
Yeah, lifeguarding. Well, yeah, that may be, But anyway, tell us how you got started.
Yeah, sure. It's a little bit of an interesting story, at least in my opinion.
Mm-hmm.
I actually graduated college with a degree in history and a minor in political science. And
Okay.
Here I am running a commercial lending company, so figure. But when I got out of college, everybody that was hiring at the time were, banks, financial institutions for brokerage and insurance.
So when you went into history and political, what kind of gig does a guy like that get if his ideal world?
Yeah, so interesting. I had a couple different majors in college. I couldn't figure out what I wanted to do, and ultimately I kind of wanted to go into the police academy, believe it or not. So I just needed a degree, and I'd always loved history. So I'm like, you know what? I've done a couple things. I'm going to finish up with what I love. And I'm going to go try to find a career. And I applied to get into police academy, state police academy. But the year that I applied, they didn't take a class that year because there's budget difficulties. Imagine that in Illinois, there's budget problems. So I ended up looking for a job, and everybody who was recruiting at the school were in those three fields.
Okay.
And I ended up interviewing with this banker. Didn't know anything about banking other than dropping my money off at the bank and having it disappear from my account too fast.
Yeah.
So I ended up hitting it off with the guy. I mean, he started off looking at my resume going, what are you doing here? Like, you're not a business major or whatever. And I'm like, look, I'm trying to find a job. I'm going to get married. I want to have a family. And I know my degree doesn't apply, but maybe you could just help teach me banking. And it turned out he was originally an English major who fell into banking. And we ended up hitting it off, and he liked me. He's like, well, I can teach you banking. So I went through a management training program there.
What bank was that?
National Bank out of Hillsboro, Illinois.
Okay.
So about smack dab in the middle of the States.
All right.
So did that management training program, ended up moving back to Chicago, joined Wintrust via Hinsdale Bank and Trust, kind of helped them get their credit department started. They didn't have a formal commercial credit department, so I did some ABL commercial credit school, helped them start a credit department, became a VP of lending for them, was a VP of lending for Old Second National Bank. Hopefully I'm not going on too long here.
No. Actually, and what about that had you go, I think this is what I want to do? Is it just because, hey, this is what I fell into, or are you seeing, well, there's some natural passions that are coming out here?
Yeah, so, I really had this goal to be in public service, right? And I wanted to be a state police officer and do that. And I missed that gap with the class, and then it was reapply and apply for another year. Well, at that point, I had a daughter on the way, and I was making decent money. And I was kind of serving people, kind of not the way I'd intended to,
Sure.
but I was helping business owners and individuals find the financing they needed to achieve their life goals and their business goals. And I really found that I enjoyed history, but talking to people about their business history and how they got started and how they made money was just intriguing to me. And I loved hearing people's stories and then turning around and telling those stories to bank management and helping
Sure.
them get stuff done. So it felt like it fit, and I was in the right place, so I just kept going with it.
And a lot of times you're educating your consumer as well, right?
Correct.
You have different options, you have different things, a way to position yourself in a certain way or whatever it is.
Exactly.
Yeah, cool. And so before you got here, how many changes have you made, in the progression of your career, Brad?
So I left National Bank, which was doing just general consumer lending and a little bit of commercial and a little bit of ag. Hinsdale Bank and Trust, pure focus on commercial, and then Old Second National Bank, where I was went into just purely sales and was doing commercial lending only. And then, Great Recession hit. I think
'08.
Yeah, '08. I think in '09 at Old Second National Bank, I think we started a year with 40 plus people on the commercial lending side. I think we ended the year with about 12, and I made it to like the last cut there. And I just, at that point, it was like go work for another bank and do loan workout. I was a sales guy and relationship guy, and I didn't want to do that. I'd kind of been doing that my last 12 months at Old Second anyways. So decided to start something on my own, and that's what I did.
And that was in 10?
'09.
Okay, so that's like a risky time to start something on your own, right?
Yeah, I don't know if I was really smart or really stupid or really lucky. I'm not sure which it was, but I decided to just give it a shot. I had a little bit of runway because I had a package leaving the bank, and I had some money saved, and decided to try it and see if we could make it work. And it was really challenging that first year, but what I focused on was finding alternative lenders, because banks just weren't lending money. So really finding who the true hard money lenders were. There's a lot of people trying to scam people at that time. It was shocking to me actually how many people I found that just didn't have real resources, that were lying to people, trying to take big deposits. We stayed straight, worked purely on a success fee basis, got deals done for people. And once we started finding true lenders and getting deals done, business just flowed in.
That's great. So what up until that point, what was the most difficult period of that career journey for you? Was it that '08 period and kind of just the having to figure out what am I going to do now?
I would say I actually saw the writing on the wall and thought I was going to get laid off. So I was preparing myself for it. The biggest thing was just making that decision. Do I want to just search for a job when there were so few jobs in the industry? Do I want to change industries, or do I want to reinvent myself? And I fortunately hired a business coach to kind of help me figure it out, and she was awesome, and got me to understand I kind of had this plan, and to put it in, encouraged me to put it in motion and take the risk. Why not? It was, if you're going to do it, you might as well, had the runway, I might as well take the risk then. If it didn't work, the job market couldn't get any worse a few months later. So that first year, trying to figure it all out, was probably the most challenging, juggling family, cutting personal expenses, trying to make it all work.
I love the fact that you actually sought outside counsel. And how long did you meet with that business coach?
Probably about 4 months in early part of '09.
Okay.
And so I actually had a plan in place if I got laid off that I knew was going to execute it. Yeah.
Okay, that's great. That's fantastic. Sometimes you have to look outside yourself, right?
Oh yeah. 100%.
Because you've already mulled about all the solutions, and someone comes in from the outside and sees things that you didn't see, or affirms certain parts of the plan and tweaks the rest of it, and you're like, okay, I have now confidence to go forward. It's really how you feel about the plan, even more so than the plan.
Right.
You know what I mean? It's how much confidence you have in the plan, because you can have the best plan, but you don't have confidence in it. You're not working it with the intention of succeeding,
Right, and things change. So when I originally went out, we were doing consulting work for clients, and a little bit of commercial lending as part of that consulting. So I was trying to help clients that I had that really manage financials through the downturn. It's a tough business to be in, almost like an outsourced CFO role, especially when you're working with clients who don't have a lot of money to begin with and are struggling to pay their bills. The lending piece fortunately took off, and about a year in, my now business partner joined me, Adam Friedman, and just brought a tremendous amount of experience, and he and I were able to see what was happening and reshape the business. And also about 9 months in, I had a bank pull me in, knew my credit background, and asked me to help them fix some issues in their portfolio. And that led me to start a bank consulting division. And so over the next 2 years, we were doing consulting work with private equity firms and banks throughout the country. So, and
is that still happening?
Yeah, we still have that division. It shrunk, partially because lending grew and we didn't focus on growing it, partially because a lot of our banks got bought up by bigger banks who didn't need our services. They had other people that did that. So, but we still do some of that business. We still have some legacy clients we work with today.
Okay, so before we get into what's happening commercial right now, Brad, what were some of the things, the daily habits of you being a salesperson and, account rep and relationship builder? What were some of the daily habits for you that were important as you were building your career?
Building the company?
Not building the company, but building your career in banking.
In banking.
Yeah.
So I think the biggest key for me in banking was responsiveness and following up with customers.
Mm-hmm.
Whether you had good news, no news, or bad news, at least updating people on what the status was in the situation.
No dark period.
Yeah, there's a lot of lenders who tend to say, hey, if I don't, and I don't mean slam on the industry, there's a lot of people who say, if I don't have an update, I just will ignore the phone call till I have an update.
Mm.
And that really frustrates people. So I
Mhm.
think just being communicative and
Mhm.
letting people know where things are at has always been big for me, whether it's a quick email or a phone call or text nowadays.
Mm-hmm.
Yeah,
I got this, following up, or no news, or whatever it is, talk to you soon. People feel like, okay, Brad's working on it.
Right. So doing that, and then for me, always having a process in place that manages my tasks for the day and prioritizes
Okay.
has always been big. I mean, at one time that was Excel spreadsheets.
Yeah.
Now it's a CRM software that keeps me in line and keeps me managing what I need to do every day.
Is there, from a mental focus or a goal setting, whatever, is there a routine, like a morning routine that you have to get yourself ready for the day?
You mean outside of the shower shave routine?
Yeah.
I do check the night before what I have the next day, and I try to be sure all my tasks are checked off or moved to the next days.
Okay.
So when I get to that next day, I know what the priorities are that
Yeah.
didn't get done the day before, and that's always my first focus. I never
like
want
that.
things to get beyond 24 hours if I
Mhm.
can.
Mm-hmm.
And then it's any of those late phone calls you missed the night before, right? The person called you at 5, but you're on a conference call and you don't want to call them back at 6:15 when
Right.
you're done.
Right.
It's following up on those items first thing, and then from there, it's attacking the rest of the schedule for the day.
That's great. Yeah. Okay, so let's talk a little bit about your firm, Brett. And by the way, I love your journey in the sense that a lot of times people look at entrepreneurs and are like, oh, they fell into it or they whatever. But it's just like, no, it just looks like you're grinding and grinding. I say that taking huge risks is usually not the way to get there, but having kind of your daily habits and the grind coupled with a few leaps along the way. Like there's those few moments where you're like, okay, should I or shouldn't I? And then you go for it, and it's like, okay, that notched me up big time. That paid off. And then grind, another leap of some sort. Hiring someone or getting property or whatever it is. So there's leaps in between, but there's a lot of grind in between the leaps.
Right.
Yeah. So I don't know if you can identify with that, but
Oh, definitely.
Yeah.
And I know the leaps. Hiring my current office manager
Mhm.
and Maura Cannon, who's just phenomenal, and she's in
Mhm.
charge of all of our underwriting, manage our staff. I never would have been able to take the business to the next level, but it was really hard to, at the time, give up income because
Yeah.
there's going to be a learning curve and you got to leverage, and then that second hire after that, and then the third, and we just hired a full-time sales manager that started about 30 days ago.
wow.
So
So it's building.
Yeah,
And you
so-
sacrifice today for a little bit more tomorrow in capacity and all these things. You're betting on it a little bit that it's going to pay off. And
Right, and it's hard to have the patience, right? Because you hire a sales manager, and you know this,
Yeah,
right? They
yeah.
need time to build.
Totally.
You can't go, well, they got to be generating me revenue 3 months from now because
Yeah.
it's just unrealistic.
Yeah.
But that comes at a cost, right? You're fronting all that cost.
Totally.
So you always get nervous. Do you have the right person? Is it going to work out?
Yeah.
I believe it will. But you can't just trust it too. You got to be supportive. You got to provide training. You got to provide resources,
Mhm.
and that takes away from what you're doing on a day-to-day basis. So that's where the risk is involved. But
Mhm.
it's usually worth it.
So how big is your team right now? Tell us a little bit about just your company and what you have going.
So working pretty much full-time in the company, there's 5 of us.
Okay.
So there's my personal assistant, my office manager, me, sales manager, and my business partner, Adam. We do have a guy who manages our bank consulting for us down out of Atlanta, but he's not full-time. He does some other stuff as well. And then we have a couple part-time underwriters that we bring in when we need to, and a couple other part-time people we bring in for loan review and consulting work when we need to. So, but the core of us is, there's 5 of us that are the core team right now, so. And then we have a couple other part-time salespeople, but not full-time.
Okay, do you do any residential lending?
Yes and no.
Okay.
Got to define the residential.
Yeah,
So, we don't do anything 1 to 4 family that will be lived in by the owner.
Okay.
So if it's something that somebody's gonna buy and live in, can't touch it. It falls under the residential regs, none of our commercial lenders or partners will touch it. If it's 1 to 4 family and it's investment, and they're not gonna live in it, whether it's a single family townhome, condo, or all the way up to a 4-unit building, we can do that under the commercial product, so long as they're not living in a unit. The one caveat I'll throw at that is if it's 5+ units and they live in a unit, still falls under the commercial. So we can do it if it's 5 and above, just not 1 to 4 if they live in it.
Okay, and so what have, so where does most of your business come from? Is it relationships, is it referrals, is it?
Yeah, so we are primarily referral based, and those referrals will come from past customers. Existing customers, repeat business as they buy more properties or do more things. A lot of it comes from bankers we work with, their fallout.
Community banks?
Community banks, regional banks, and national bankers
Okay.
that will have deals that won't fit, and they'll send us the stuff that doesn't fit. And then we actually have relationships with a lot of residential mortgage offices.
Okay.
And we serve as their commercial lending arm. So if they have clients that have commercial deals, we'll partner with them and do the commercial business for them.
And do every one of those referral sources have opportunity for revenue?
If so choose, yeah, there is
Okay,
opportunities
if
for
so
revenue.
choose, but
Yeah.
typically not, right? Typically they're just referring because they want to get the deal done and serve their client.
Yeah, so, most bankers, they can't, they're
Right,
restricted, right?
right,
So they're
right.
just trying to serve the client. I always have this old adage when you're a banker, if you can't get the deal done yourself, then if you just say no, then it's hard to ever get back in front of that customer. But
Yeah.
if you make an introduction, whether it's to me, to another banker, and they then get it done, well, you can stay in touch with that
You're the
client
resource,
forever,
yeah.
because you're the one that helped them, and then maybe your bank will change, or you'll be at another bank later, and you can pick up that customer
Right,
again.
or there's
So-
deposits, or there's this or that, and all the various things that banks do for people.
Right, so I would say, certainly mortgages offices we partner with, there's a fee share arrangement, and they earn income from us, from the business we do. A lot of the lenders, it's just, hey, we'll refer you stuff, continue to bring us stuff. Attorneys and a lot of other sources, they just want to get their customers taken care of. So.
Absolutely. And so there's a lot of residential loan officers that we've interviewed and that probably view or listen. And is there anything, so if you're sitting in front of a residential loan officer, what are you saying to them to say, hey, listen, I can be your guy, I can help you build your business?
Pretty much what I'm saying is, hey, you're seeing opportunities right now where you probably run into business owners that have financing needs and you can't help them.
Yeah.
And the truth is, you can. You can partner with us, and we'll handle it all for you. And as simple as just giving us a name and a phone number to, if you have financial information, passing it on, and we'll run it with it. We'll take care of that client. We'll give them all the options. The nice thing about working with us versus going to just one bank is one bank, you have one product and only their sets of product. We have over 350 funding partners we work with. And it's not just banks and credit unions, it's hard money, private money, factoring. So we can present all these different options that client may not even be aware that exist. Very similar to being a residential broker, right? You don't just have a bank, you have Fannie, Freddie, some non-bank lenders and other products. We have that same thing, but it's a little broader on the commercial side.
Okay. So getting into just what's happening now commercially, is there a trend right now that's surprising you?
A trend that's surprising you?
Yeah, just something that's happening as a result of COVID, or as a result of maybe interest rates and where they're going, or the market. Is there something happening that, or maybe that would surprise us? Maybe not surprising you because you see it all coming and you're all wise. But is there something that we would say, wow, that's a different trend in the commercial market?
Well, let me correct you. I'm not all wise. I guess occasionally and get things right, but that's a really good question. I would say that the thing that's probably surprised me, not really talking real estate so much, but the number of businesses that have actually been successful despite COVID. And we're seeing something I've never seen, and I'm roughly 25 years in banking now, but I'm getting business owners coming to me with more cash on their balance sheets than I've ever seen in my career. And I think that's the biggest surprise. All this stimulus that went out, a lot of people found ways because they cut expenses or did other things. Or maybe their business kind of eked along, but they still were able to take advantage of the stimulus. And now they're sitting on tons of cash. Or they went and got the economic disaster recovery loans, EIDL loans, and they're sitting on that cash. And that's 30-year cheap money, so it's not as big an impact on the balance sheet when it's
Or
on
maybe
there.
they adjusted their workforce, and all of a sudden they have a lot more to the bottom line, and they realize maybe we were too fat.
Right.
know?
Yeah, there was a lot of that. So I don't. A lot of outside of certain industries, like obviously the hotel industry has been devastated. Restaurants, especially in areas with heavy shutdowns. Not to get political, but those with tight shutdowns with vaccine passport requirements, the restaurants are just getting killed.
Yeah, they're choking.
But just as a general rule, a lot of operating companies have done very, very well, and they're sitting on a lot of cash. Their balance sheets are better. I've just, in my years of banking, I'm just not used to seeing that. Companies coming in, small $1 million revenue company that's got $300,000 in cash in their balance sheet. I mean, normally we'd see that company, they'd be operating week to week, if not month to month, 20, 30, 40, 50 grand. Not the type of cash we're seeing right now.
So is it easier to do deals now than it ever has been in that regard?
Yeah, so typically stronger balance sheet's gonna mean easier to get deals done. Still, ultimately, their business has to be profitable and they have to have cash flow, right? Under most circumstances, there are definitely products for companies that are profitable or marginally profitable. So I don't wanna throw everybody into one category. But as a general rule, if you're still profitable, banks and credit unions are gonna open up fund financing for you. And it does make it easier when you have more in reserve and you have a better, stronger balance sheet.
So now let's get into just what's happening in the commercial real estate market in terms of space. Companies are rethinking their space, right?
Oh yeah, all the time.
Yeah, and is there gonna be a glut of availability? Is there right now a glut of availability of office space and all these kind of things? Or are people reusing it, or what's happening?
So I can tell you two things. I can start off with kind of what I'm seeing now, and I can tell you where I think it's going. And again, that would be some guesswork on my part, educated guesswork, I'll say that. First off, it depends on the type of space. Industrial, except for big box industrial, but any small, mid-sized industrial, say 50,000 square feet or less, absolutely crazy. I have so many customers looking for space on the industrial side, and they can't find it. They can't find buildings to buy, and unfortunately, a lot of communities don't want to build more industrial because people don't want to perceive truck traffic and everything else. And I think it's a mistake. I think a lot of communities are missing out on the fact that a lot of retail sales have shifted to online sales, so those aren't getting done in retail places.
So the tax revenue is not gonna come from that retail anymore.
Right, but that tax revenue may now come from an industrial building that is now selling online. So the communities that aren't allowing industrial to get built or don't want that use are now missing that sales tax revenue that is now shifted to online sales. And I think a lot of us are struggling to realize that. But there's a huge lack of industrial, and a lot of retail businesses that were paying more for retail space that now are gone primarily online are shifting to industrial space. So that demand I don't foresee slowing, at least on the small side. Now, none of them can afford to go in 100,000, 200,000, million square foot building, right? These are small to mid-sized businesses. So unless those bigger buildings start to get split up, which they're just not functionally built to do that, there's still a higher level of vacancy on that side, but the small side, it's crazy.
And so you're on the zoning, are you in the zoning commission for Lab?
I used to be a planning and zoning commissioner and a trustee as well.
Okay, so where do you see, what communities in our area are friendly towards what you're talking about, that are innovative, that are thinking what you would perceive as correctly on this industrial mix expanding?
So
Joliet? I mean,
That's a great question.
Yeah.
You know, so there are some communities, you know, Bolingbrook's always been very friendly to industrial. Joliet, Shorewood, some of those communities along that corridor, they're communities with a lot of excess land that aren't fully filled in, so it's a little bit easier. It becomes
Yeah.
much harder when you're a built-out community. You know, you hear the advertisements on TV, Bedford Park and some of those others. Franklin Park, areas around O'Hare tend to be very industrial friendly as well because that's such a big chunk of their business. But, you know, a lot of communities I think are missing out. I mean, if you know, we're in the western suburbs here, you don't see industrial being built in Oak Brook.
No.
You don't see it in Wheaton, Glen Ellen, up and down the 355 corridor. It's somewhat hit and miss. Some communities that have it and some that don't. But, you know.
Yeah, and then it drives traffic. It drives retail, right? Because now you got to go get something to eat. You're going to go shopping at lunchtime, whatever it is. The workers come in. People start thinking about this is where I want to move to. I want to live close to work or whatever it is.
Yeah.
Okay. Has remote in the office space, is remote really impacting, or do you feel like we're going to get back to, you know, like for instance, our companies, our group of companies, you know, we are always going to have a remote option. We feel like there's a great upside to talent acquisition and all these different things. We used to have geographical limitations, traveling to and from work. As long as you can keep them accountable to the workload and all that, we see like our workers are doing just fine remote as well as in office. Some prefer that. But how do you see it? What's the mix? What are you hearing there?
Yeah, so I think there's a couple trends happening from what I'm seeing from the lending side and the buildings we're looking at. The first is there continues to be an exit from the city. A lot of people are working from home. A lot of companies have identified a good chunk of their workforce is in the suburbs or elsewhere. So we're seeing a trend to be smaller office space, and sometimes multiple offices. So companies that may have had everybody focused on one office in the city are now saying we're going to have 3 offices in the suburbs, and they're going to be smaller offices, and maybe we're going to keep some small footprint in the city for whatever purpose.
Yep.
But so I think at the end of the day, a lot of companies doing that are going to end up with less office space, but now it's going to be spread out. The vacancy rate along the I-88 corridor, which is a huge office corridor, has, ever since the Great Recession, remained high and elevated. I think depending on where you're at, you're typically looking at between 20 and 30% vacancy, depending on which section of the corridor you're on. Believe it or not, through COVID, that really hasn't changed. That vacancy level stayed pretty consistent here. Now, where the city is seeing a big uptick in vacancy, I think that's because you've seen the adjustment of people filling in some of these offices out here in the suburbs. So my long-term view on office is that I think ultimately there is going to be more work from home. I think if you look at the studies that were being done prior to COVID for companies that had gone to at work home forces or partially prior to COVID, they were finding the majority of those studies were coming back, were saying that people were less productive at home.
Okay, I remember that.
So
Google, right? Yeah.
So the trend right before COVID hit was for companies to stop allowing people to work from home as much and starting to pull people back into the office. On top of that, now post-COVID, or the other trend pre-COVID was big open office spaces, right? The same studies they were doing were saying your average workers weren't comfortable in big open office settings, right? They didn't like some of the banter that was going on. They weren't as productive. So it was appearing like there's going to be a movement to putting people back into offices. You couple that with COVID risks and future pandemic risks, is that you don't want 20 people in an open office because now they're all going to get exposed if there's one
or you got to
illness.
space them out so much that now you've got a poor use of space.
Right. So I think what we're going to see going forward is that a lot of the space in the city and elsewhere is going to get reworked now into being more office type space, like enclosed offices versus the big open floor plans. Doing that will, by in its nature, take up more space. So a company that may have had 30,000 square feet of open space maybe now have 25,000 square feet but have it be offices. Some people maybe not in every day of the week, but at the end of the day, I think that space will get reutilized. It's just gonna change.
Okay.
Now, what's gonna happen
That's a
with
pretty
that?
rosy outlook, actually, as opposed to ghost towns.
Yes, now, I'm saying that, I don't think that's gonna happen overnight.
Yes.
I think that that's a trend that we'll see over the next 3 to 5 years. I think in the short term, there's gonna be markets like major city markets like the city that are, you know, a lot of leases are gonna come up and a lot of corporations are gonna shrink. They're
Yes.
gonna move into other buildings. I think there's gonna be a lot of damage and hurt that's done. In the short term, but I think in the long run, I think we'll see most of that space get reutilized. Overall, I think we were a little overbuilt on office to begin with. So I think I think you'll still see a little higher vacancy, at least in the Chicago market.
All right. Last question, Brad. So let's say you're an investor listening. Where do you see opportunities for investors now in the commercial space? Where do you think are the, either the current, opportunities or going forward, where do you see some of the, something with some meat on the bone for investors in purchasing real estate?
Yeah, so a great question. We have a lot of clients still buying single-family investment, 1 to 4 family and apartment buildings. I personally think because interest rates are still low, that the cap rates are low, and although I think you can get good deals there, I do think that it's going to be harder to get a big appreciation in those assets. I think they're great assets to hold long-term, collect rental income on, pay down debt, and have a good long-term asset. I think it's going to be harder to get shorter-term appreciation on those assets.
So like a flipper, as opposed to someone who's holding.
Right, yeah. So if you're looking to hold long-term, I always think apartments are a great buy.
Yeah.
It's a very competitive market, though. Right now, it's hard to find good buildings. I see a lot of people leaving the Chicagoland area because you can get much better returns buying buildings in Bloomington or Champaign-Urbana or Springfield or Peoria.
Wow.
Other markets that have had, by the way, a pickup in population since COVID, as people have gone a little bit more rural. They've seen a little uptick in rents, and you can get some good buildings down there at much better cap rates than you can here in Chicago. That aside, I think I'm seeing some people take some risk and buy some office buildings. I can't give details, but I just had a client yesterday send me a deal. They're buying a property for $12 million that 5 years ago traded for like $23 million. It's a large office complex. And so they're in a position where they're going, we're going to dump, we built into our budget some TI money, some leasing commissions. We think at the number we're buying it, the cash flow works. There's a little bit of tenant risk, but we think we can bring new tenants in. We think we can put some money into the building and make it the premier building, but have affordable rents at the price we're buying it at.
Interesting.
And have a really good product. And they've, by the way, done this with several other buildings over the last year and a half and been very successful. So I do think there's some opportunity there. Obviously, you can't pay 2016, 2018 prices for these buildings, but if you can get a decent office building or maybe a good community retail center at a good price, community retail centers tend to always be full, right? Dry cleaner, grocery store, sandwich shop, pizza place.
Yeah, everyone needs that stuff.
Yeah, that stuff's not going to go away.
Yeah.
So if you can find good deals in those buildings, I think pricing's good on them right now.
And Brad, does your firm do national lending?
Yeah, so we lend all over the continental U.S.
Okay.
We've closed deals, I lose track, in 32 or 36 states at this point.
Okay.
So we've got relationships in pretty much everywhere.
What percentage of your business is in Illinois?
So we're about 50-50 today.
Okay, that's great.
So
Means
about
you're-
50% of it's outside of Illinois
That's
now.
fantastic. That's a good mix, actually.
Yeah, it's really nice. I would say the outside of Illinois piece is probably growing a little bit quicker for us at this point than the in Illinois piece, but part of that's that we're following customers. We have a lot of customers.
Where are they
Hate to
going
say it.
primarily?
I would say the primary states are Florida, Georgia, Tennessee, and Arizona.
Yeah. Okay. That's what we're like the feeder. We're the farm club for all the southern states. Something else. Well, Brad, I want to say thank you for your time here. I think it's been really informative for everybody. We'll have your contact information in our notes and our show notes. And I just want to say thank you for listening. Thanks to Brad Hettich for just his commercial expertise. And any opportunities you have where you have a question, Brad's your guy to go to.
Never hesitate to reach out. And we'll talk about any type of deal, business lending, real estate lending, whatever you need. So as long as it's not owner occupied, single family.
Okay, thanks, Brad.
No, thank you.